I bought the 3 worst performing stocks on the S&P 500 in 2020. And I also bought the 3 best performing stocks on the S&P 500 in 2020. And we're going to do an experiment to see whether the test of buy low, sell high holds true on those stocks in 2021. But before we get into it, if you want the most honest and transparent information in the mortgage and finance industry, do me that favor, hit that subscribe button, hit that notification bell, and please hit the like button so more people like you can see this video. And in the comments below, after you watch this video, do me a favor and comment. Tell me which stocks you think are going to perform the best in 2021. And don't forget about our race to 10,000 subscribers, where when we get to 10,000 subscribers, we're going to pay off one lucky subscriber's rent or mortgage payment for a month. All you have to do to get entered into that contest is subscribe. So go ahead, hit that subscribe button. I'll wait. Okay, so let's get into it. Let's discuss buying the best and worst performing stocks of 2020 on the S&P 500, why we're doing it, and what we're trying to get out of it. And really what we're trying to do here is we're trying to test that whole theory about buying low and selling high. And the 3 best performing stocks on the S&P 500 are arguably at high valuations because they performed very, very well over the last year. And obviously the 3 worst performing stocks are at low valuations because they didn't do very well. So what we're going to try to do is test what happens if we buy 3 of each and then ultimately see whether the ones that we're buying at low values perform better than the ones that are being bought at high values. And I'll give you my predictions on that at the end of this video. So in order to pick our test portfolio, we picked the 3 best performing stocks and the 3 worst performing stocks. Now, we excluded Tesla because Tesla was only part of the S&P 500 for the last 8 days of the year. However, if it was included in this portfolio, it would be the #1 performer of 2020 on the S&P 500. That is undisputable. It made significant gains in 2020. It had a stock split and it has continued to go up and up in value, making Elon Musk the wealthiest man in the US, if not in the world. Now, not only did we buy the 3 best and worst performers, we had a minimum value that we would invest. So we wanted to make sure we had at least $100 worth of each stock. Now, for the 3 top performers, this was easy because all 3 of the top performers had stock valuations for a single share that were over $100. And for the 3 on the bottom, we had to buy multiple shares in order to get to that $100 minimum threshold. Now, for the purposes of setting up this portfolio, we opened up a Questrade account because we were able to get $50 in free trades with them. So there is no trading costs factored into these values. By the way, if you want to get $50 in free trades, I'll put a link in the description below where you can sign up for a brand new Questrade account and get $50 in free trades. Also, remember that when you sign up for a Questrade account, purchasing ETFs is free, which is a huge benefit of opening up a Questrade account. So again, link in the description below. Obviously, I make a little bit of money if you hit that link in the description below, and obviously you get $50 in free trades. So it's a win-win for both of us. So the 3 top performing stocks that we purchased were NVIDIA, Etsy, and PayPal. NVIDIA is obviously a chip maker. PayPal is a payment gateway, the most popular one in the world. And Etsy is the crafting marketplace that has pretty much blown up and become a pretty cool marketplace to buy some pretty cool stuff. Fun fact, my wedding ring was purchased off of Etsy from a designer in California. Pretty cool. Now, the 3 worst performing stocks were Carnival Cruise Lines. To nobody's surprise, because I think cruises were probably the industry that had the most negative impact from COVID of all industries. And the other 2 were energy related stocks. The first was Occidental Petroleum and the other was Technip FMC. Occidental being a oil company and Technip being some sort of a technology company in the oil industry that provides oil services. I didn't do a lot of research into either of these companies because that wasn't the point. Obviously, I would never make an investment decision based on purchasing the worst or best performers. This is just an experiment. So I didn't delve deep into either of these stocks and what exactly they do, what their performance has been like, and why they performed so poorly over the last year. We just went with the 3 worst performers, and these were them. Now, our cost basis was as follows. We bought NVIDIA for $551.92. We bought Etsy for $182.12. We bought PayPal for $238.45. And on our 3 worst performing side, we bought Carnival Cruise Lines for $20.20, Occidental for $19.84, and Technip for $11.70. Now, we've owned these stocks for a couple of weeks so far. We've had 2 that have performed very, very well. Etsy is up about 15%, And Occidental Petroleum is up about 13%, which is quite surprising given the shift from Republican power to Democratic power. We've also had two stocks, one in the top performers and one in the bottom performers, that have done poorly. So Nvidia is down about 3%, and Technip FMC is down about 3.5%. And then Carnival Cruise Lines and PayPal are both up about 2.5%. So as of right now, the way things are looking is our worst performers of 2020 are up about 5.33%, and our best performers of 2020 are up about 2.2%. So right now, the worst performers of 2020 are out to an early lead. Now, I've put these all together in a portfolio in Google Sheets that I will make available to you. So I will put a link in the description below. You can jump in there at any time that you like and check out what is happening with both portfolios, the three top and the three worst performers, and see which one is winning. And I suspect that this will change over time. Now, one of my guesses about what will happen with these two portfolios is I fully suspect that one of the three worst performers of 2020 is going to have some sort of financial crisis. I fully expect that one of them is going to go down in absolute flames. I think it might be Carnival Cruise Lines, because if things don't get back to normal pretty soon, I can't see that company sustaining for a very long time. Or one of the two oil companies could potentially do very poorly as well. But I have a feeling that one of them is going to have some sort of a catastrophe, and the other two will have to make up for the losses on that single stock. Now, that being said, I still think that my poor performers are going to outperform the good performers. And the reason why is because I think that for Nvidia, Etsy, and PayPal, they've had pretty significant amounts of growth over the last year. And they're probably, if my guess is correct, they're probably going to be pretty consistent and pretty stable in their price points for most of 2021. So I think that the three worst performers are probably going to win, with one of them having some sort of catastrophic event. And I think that the baseline of our top performers is going to be pretty much flat for 2021. Now, this is anybody's guess. You know, we can go out and we can try to make predictions on what's going to happen with all these stocks, but really all we're doing is a simple experiment to see if really poor performers have the ability to bounce back, and if really good performers have the ability to continue to grow way beyond some of their best performing years. And what we'll do is we'll come back to this midway through the year, or perhaps at the end of the year, and we'll just take a look and see which ones did the best. Was it the best performers or the worst performers? Or was their previous year's performance not an indicator of what would happen in the following year? I'm really interested to see what happens. Again, this is just for fun. Don't go buying these stocks on my recommendation. This is purely an experiment for basically YouTube views. Now, in a future video, what I'm going to do is I'm going to give you a better investment strategy than buying the three worst and the three best performers. What I'm going to do is do a video on the Ray Dalio investment portfolio strategy, where we purchase ETFs in such a way that it is designed to minimize our risk and hopefully get a big upside for the years where there is a big increase in stock values. And that is coming up in a future video, but I don't recommend buying the best and worst performers on the S&P 500 as an investment strategy. Again, this is just an experiment and it is for fun. It is designed to get YouTube views. So if you're finding these videos interesting, if you're finding that there's a little bit of entertainment value and a little bit of education value, do me that favor, hit that subscribe button, hit that notification bell, and hit that like button for the YouTube algorithm. And don't forget about the race to 10,000 subscribers. And by the way, this whole YouTube channel, everything that we do here, is completely funded by our mortgage brokerage, Mortgage 360. So if you are in the process of getting a mortgage, please consider us for your mortgage, because doing so will allow me to continue to make these videos, or at least it will let my wife, who is also my business partner, let me continue to do these videos and build this channel. So please, please, please consider us for your mortgage needs across the country. We'll see you on the next video. Hope you enjoyed this one, and we'll talk to you soon. Cheers.